Hi everyone, so it's Tanya here from Cannon & Co Sales and Lettings. I'm back with Emma Kinsella from G3 Mortgages just to talk about all things, I suppose, mortgage related, but I think the thing that's on everyone's lips at the moment. So Emma, actually, what's the main thing people are talking about at the moment?
Interest rate rise.
Oh God, yeah. I know it's probably a bit of a pain for mortgage advisors like yourself, isn't it?
It is.
So what actually happened? So last week there was an increase, wasn't it? So what actually happened last week?
Yeah, so there were various predictions. People thought it might go up 0.25%, maybe half. It went up by 0.5%, 0.5. It was quite a shock, I think, to some people. And it's an indicator of how serious the Bank of England are in trying to reduce inflation. The inflation figures that came out the day before weren't what they expected. It hadn't really gone down from the previous month, which made them decide to increase rates as they did. Lenders had anticipated it and priced in already. Sort of the week before, we were seeing lots of lenders pulling rates and increasing them. Some lenders at very short notice, which is always fun for a mortgage broker.
Yeah.
But since Thursday, we've had a flurry of more lenders increasing rates, pulling rates at short notice. So at the moment, when I'm speaking to clients, it's difficult, but I just have to say to them, this is the rate as at today. It could get pulled really quickly. So unfortunately, it feels like sometimes you're pushing clients to make quite quick decisions, but the reason for that is that we don't want them to lose that rate. And then obviously I have to tell them, oh, by the way, it's gone up. Yeah. So everything's having to be done sort of quite quickly at the moment.
Yeah, no, and I think that's key. There still will be people needing to buy in different things, isn't there?
I've still got buyers. I've still got next-time buyers. Still got first-time buyers. In the grand scheme of things, I know it sounds a bit of a weird thing to say, the interest rate is almost irrelevant, especially, if you're a first-time buyer, because it's all about your budget and what you can afford as a monthly payment. So if we can get that mortgage payment to fit your budget, the rates are irrelevant, because especially if you're renting and you're paying higher rent, it still makes sense to buy.
Yeah, especially as a house goes up in value, doesn't it, generally? So yeah. you stop at, and actually, if you think of renters too as well, they might be on fixed terms and things, but a landlord's mortgage payments might be going up their situation. So it's interesting as to kind of where we are with things. I think it's not a nice thing at the moment with it going up, but we know where we are. We knew it was expected possibly, but I think the scaremongering in the news doesn't help. It's actually, like we keep saying, speaking to and being realistic with what's actually going on.
Yeah, I saw another article this morning. The average 2-year fixed at 75% loan to value and above is 6.29 or something along those lines. Yes, there are rates that high, but we're also still seeing rates in the 5% mark, and there are still discounted mortgages available for those who have a bit of flexibility in their budgets in the 4s. So whilst the 6% plus interest rates keep getting, the most attention in the media, there are rates lower than that available. Especially the more equity you've got in your property, the better the rate you will secure. And I think it's just a case of, at the moment, speak to an independent mortgage broker, get the right advice for your individual circumstances, because everybody is different. No mortgage is the same as another.
I agree. And like you're saying, and what does that actually mean for us as probably a estate agent? I remember, not so much recently, but when it was increasing the rates, for us, it's about, this is where the sales progression element comes in. Like, it's about understanding when people's mortgage offers expire, so we're keeping up to that, so they're not having to go back through. And I think that's key. So because of that, we generally don't get much fall through. When there was a lot of, do you know what I mean, in September, when everything kind of went on, there was more fall throughs in the industry. We didn't generally get that because we're watching all the time. And I think that's key, isn't it? It's having those conversations. Even if we've got an agreement in principles, the amount of times I have conversations with you and I kind of say, look, is this lender still, do you know what I mean? And things like that. We just have to make sure that things are still in place, I think.
Yeah, and the thing to remember as well, just you mentioned agreement in principles. With the majority of lenders, having an agreement in principle with them doesn't secure the rate. You do not secure the interest rate until you submit a full mortgage application. So it's just worth people being aware of that. They think, I've got an agreement in principle, my mortgage is, agreed. Until you actually submit the application to the lender, that's when you choose the interest rate of what they've got available at that time.
Yeah.
So
I think there's some key bits there, isn't it? I think, like you say, we're coming back to this. We're trying to squash the myths of what's actually going on and giving it in real-time information. And I know people find these useful, and I definitely need your support throughout. I'd be lost without you. So it is a strange time, let's be honest. Do you know what I mean? But it is with everything. But I think there is still positives. We're still selling houses. People are still needing to move. It's not as people are saying. And actually, probably the disposable income has gone a little bit, but actually this is where we prioritise what we need to be spending it on. Less takeaways, less things. Do you know what I mean? And coming back to the true values, probably I'm the same. Do you know what I mean? Like, waste a lot of money, but actually the core bits probably just brings us back to that, really.
Yeah, it does, definitely.
So, but no, thank you as always, and we will follow up again next week.
Brilliant.
Take care and have a good week.
You too.